Checking mic. Checking mic. Perfect. Okay, let me share this because nobody knows it. Ready? Checking. Let me put. Probably I want to put my own. My own. how this thing headphones is called. We tried to invite some friends today, but friends at working. Let me check. I let me change this. Hello, hello. Hello. Hey, 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 hey. Oh, I'm so dumb. Yeah. Okay, default. What is this? Hey, hey. Okay, now I listen to myself. Perfect. Okay, good. I just wanted to hear what you guys are listening. Okay, let's start this, guys. Thank you for waiting. Hello, guys. Hey, Alavi here. Actually, I was about to show you where's my profile of X. If you guys. I'm Alavi here. I will start stream right now. Okay. So let's jump in, man. Today I'm quite excited because we had an amazing move. It was one of the craziest stuff we have ever witnessed it in, at least in the Nasdaq market. It was impressive, honestly. Um, okay. 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 I'm just checking my mic. Perfect. Okay. Good. Okay, that should be. Okay, audio should be a lot better because that was what I was trying to. Okay. We are going to have. Well, first, let's introduce BUHO. Yeah, the profit. What are we looking for? Welcome. Yeah, for those who will start joining now. Welcome. Let me present myself. My name is Roberto Aladi. Mostly all the people know in the crypto world know me as Ladi. I'm been investing my six and a half years and energy and money and sweat and everything in understanding and riding the waves of the market. Um, my journey started very in the 2019s. We were trading very different stuff. Um, there was no stables, for example. When you want to trade an alco, you had to beat VTC, right? So you will sorry you were always exposed 1x long in any situation in back in the day. Then I remember when Binance introduced it, the USDT stables. It was very helpful for back in the day. I was still learning, But it made a lot of sense because then if I wanted to trade in a position, usually I had to buy BTC and then buy any altcoin. Then stables came, and not much after that. Futures came because there were no futures back in the day. I remember clearly that when Binance brought them, and it was one of the first products I traded because, I didn't know anything about the stocks, anything, nothing, and then there is Binance who bring these 25x futures. Was what is this thing, right? And me with a couple of friends, we tested that stuff, and yeah, it was so crazy. Um, Back in the day, I focused myself on something called grid bots because very early in my journey, I found them because I found myself that honestly, in the sense that my friends, when where they were trading like a buy and hold style, right? And it's not that it not makes sense to me. It just like it was so hard for me because I remember the 2020 crash. It was my birthday actually. Uh, my birthday is 9th of March, or on March 10. For that morning, market started to crash. For March 11, we had the peak panic, and I was like 72% down my portfolio. Well, was crazy stuff to be honest. And from there, it's being a lot of making, like I think this decision that every trader makes to itself once, at least at the time when it's okay. I lost this. I lost a chunk of money. Uh, what should I do, or did I stop here? If this is actually the end, should I just give up, or I make this work, right? So it took me actually some time to figure what I should do, and well, I decided to continue, right? Then I started working for an exchange. I learned to change options. I mostly use options as a hedge. Honestly, with the things I do, I'm finding that I can make some money on it. It's not much. It's not a good edge, like super stuff. But if I get out of that, I get like distracted, so I start to focus just on it. But options is definitely, and all of those who bring jumping ball, they will be teach what options theory is because you gotta know, right? You gotta, let me check one thing. You gotta know actually what are you, um, you gotta know what you are. Sorry, I just lost the plot a little bit. I just realized if the mic, I don't know if it's active or not, but should be right now. So yeah, I was saying, like back in the day when I was starting, and one of the edge I want to offer into BUHO is, yeah, options theory. I was speaking about options theory, and then because it's really important, right? Right now, I see like the market, and I see with the lens of the options, and I do some arbitrage called high frequency trading, but it's mostly arbitrage in big positions, right? People look when they are trying to engage in the market. The professionals, when they want to engage in the order books, I know that they are willing to give up an edge in order to engage with me, right? So I take out that inefficiency. Then, if you can be fast enough, or if you probably don't have to be fast enough, not that fast, I mean, under 1 second. I mean, if you have your code and you can be fast enough, like a couple of seconds, to capture that volatility when certain um, aggressors is the word, are hitting the bid or lifting the offer, uh, I can call you that and you have an edge there, right? Because of course, this if this is done algorithmically and you're computing level 2 data and this and that, probably you're trying to calculate where the gamma of the input of the market that is giving you in the form of market orders. Totally, you're doing something else, right? And I do something of that in small size, which it's having some quite success on it. But I run in parallel of that, and one of the things that I face is that back in the day it was so hard to not rely on my discretion, but something clear to follow, because I was like, and I still having clients. Actually, it's not promotion, but I still writing code for some clients, and they, most of them, they want to cut their emotional part of the trading, right? And because they start to realize that if you're actually making something mechanical, why just stop there? Why just, you can go through an algorithm and make your steps like a logic, right? So why you even bother in that? So let's stop the talk, and I want to show this indicator. It's from LUXALGO. You guys, let me check. I'm going to give you, where is this? I don't remember. Well, this is LUXALGO. You can check this. Oh yes, on the channel. This is the open range indicator the LUXALGO made. It's pretty good. Honestly, I recommend it to you all, because this is the kind of strategy we're doing here. I've been doing this strategy like from 2 years right now, and honestly works pretty well. And one of the persons I follow that I encourage very highly to follow too, and I mean, and I don't like, and I don't know him and anything. I'm just honestly telling that this pit trader is the guy that I've been following one, and he's also open range trader. Actually, I'm learning from him a lot of stuff, because I learned my own way, the open range, but he's a guy from the pits, like 27 experience, so I like to follow a little bit of advice. So let me explain. Let me go very very simple, because this rule's probably going to blow your mind, and let me explain it to you real quick. Just give me 1 second. One second, guys. Okay, thank you. Thank you. I'm sorry about that. Okay, what I was saying. Right now I have my terminal right here, but I will put it away right now, because I want to show you the way this is mixed and the way packs and use this. because I learned from him a lot, some stuff, and I mix it because I I choose to lean to his way. So at the beginning, I was thinking, should I fade some open ranges, or should I just break and trade the short, right? But many of the situations I end up trading situations like this, right? And like when the market like go through the whole range, and well, this is like, well, in some situations, and I must say most awfully yes than not. This is like very rare if I just short this and will instantly go into my stop loss. But like a lot of situations, you end up like shorting at least a good momentum. Okay, so in the real session, you will looking at this, and the idea is you will always long anything above the open range high, and you will go and short anything below the open range low. Anything like, and this indicator has already built in uh, anima. Sorry, I thinking something else. Anima, and well, if it's like just an SMA, right? Nothing, just like to give a context of my price is trading short the lower, and I keep me an extra layer of what I'm used to see, right? Because back in the day, I only used to see IMAs and stuff. So right now, let me show you where we're trading in terms of DOM. So okay, let me show you this. For example, some kind of orders when you see getting hit in the order flow, you need to learn when to detect where is real liquidity and this liquidity is actually getting lift in the order book. For example, let's watch. I'm going to put you, let's see, I want to see BTC right now only. I'm gonna ditch the charts right now, and let's see. Just let me connect BUHO. Alright, where are we looking? Yeah, perfect. Okay. Okay. Yeah. So, sorry, man. Let's say some of this liquidity, it will be not real, right? Because how to say this in a to sound, I don't want to sound smart, right? I just want to be clear about, I want to concept or the uh, expression, the forced behavior that certain participants has to make when they interact with the other book, it's unavoidable. All right, if they're doing that, it's like almost impossible that it's something else. Possible? Yes, it's possible. It could be something else, but I mean, it would be two different kind of forces fighting each other instead of when somebody's pouring money into the books. So the first thing, already my books. Well, I continuously I am moving my books, so the books that I'm looking right now, I'm totally fine with them, and I like. I could even go probably. Yeah, yeah. I would like to see where this liquid is moving on, how it is behaving. Of course, right now it's after hours. It's about to start London session, so that will be interesting. Okay, just 1 million of the fill bar. 1 million. It seems too much. Okay. Okay. Perfect. So, for example, you can mix in the sense that the original indicator, it puts you with this kind of signal. Do you see this small triangle here? Triangle, triangle. Okay, that are the real signal. The only thing I did is just adding this long visual signal that I like to see when I'm about to take a trade, right? So let me check this. Just let me confirm that I can engage the market actually. Okay, just let me prepare in case if this is real. I can look my bits. Invalid amount. Unknown error. Okay, let me check. Okay, this is not a real position. I mean, there's still a book I need to consolidate. I'm flat actually, but let me check. Okay, apparently I can. I thought I will be able. Okay, so the point is, the moment that you are long, or sorry, the moment the price breaks above this high range, you want to be long. If the price goes in again into the open range, means flat. Okay, that's in the original. That's in the original theory of the open range. Okay, then the way that I modify a little bit is sometimes if this line of the middle gets actually touched and penetrated, probably going to be that and pay the risk of holding that position to my stop loss, because probably could bounce out of that middle line, which is the middle point of the open range. So the moment this happens, I like to see this because why? This way I don't miss the trade, in the sense that okay, boom, I want to be long. Probably I don't know if I actually long that and I'm holding the risk, or maybe I didn't even engage at all and and I rush to break even because that's what I do. I mean, if you're scalping, you mean that you go for 5 6 bars, right? That's a scalp. Okay, I would like to mention that if you're scalping, you should go for a couple of bars, right? I don't mean that you shouldn't hold runners. No, I mean, oh, totally. If you have had a runner, probably you should add into that runner. But I mean, no, you should aim for a couple of minutes into that trade because you're scalping. You are trying to go to the next opportunity, or either you take the loss or not, or you don't trade at all. So the moment these signals triggers there, I know that I want to be long, and then there's a lot of time that you are given to actually take this trade. So let me go to the Nasdaq and the Standard Poor. It's almost the same move because this was produced by the by the news about the suspension of the tariffs, which was an impressive move. I mean, when I was looking to this monitor, then I looked back. All this candle happened like in a couple of seconds, probably I don't know, 2 seconds, 2 or 3 seconds, and it was like, yeah, almost, yeah, almost. I thought it was like a 1K, but the complete move was like here. So when I watch this, I say, hey, I want to participate in this move too, because usually this expansion is very common in these kind of markets. If you compare it with Bitcoin, it happened too, actually. But sometimes you get more aggressive pullbacks. But honestly, this move was very crazy. Let's check Ina. Wow, look, Ina was Ina was sorry. Ina was actually a very fast trade. This is too clear because this script is made it to one deviation of this target is met, then it longs at the close. So when this happened, of course, happened with so much volatility. If we have traded this, man, that was an impressive run in INA. But going back into equities, this isn't a strategy that almost always will put you on the right side of the market. Your way is just you manage your risk, right? This is the type of situations that get hard when the open range actually tells you that you need to short and you need to short, right? That's why breaking even is very important. And the other part of the open range is adding adding into your position. When you find a good trade, you should add into a position. But I think we should give that talk to later because we had a schedule actually today. I don't have anything like anything script, and I'm being very honest and to see how it goes, right? Yeah, totally. So going back to how understand the DOM and when this action is happening in the real time. Okay, let's talk about that. First, I need you to understand the footprint. I gave you actually some parts of the videos. They are also in my Telegram. Let me show you very quick. I'm looking for you where I put it should be here. Homework. Yeah, it was here. Okay, this is footprint deep dive. This is actual creators from the footprint, which is market delta. So I need you to understand the footprint. Why? Because it will give you some insights, and insights that you, well, my opinion, it should be and could be the game changer for you, but depending honestly in how each one of us wants to navigate the market. And it's about let's put the clusters here are called clusters. So let's look at them. At the first glance, when you looking at the footprint, it's important because you can understand where the most bloom are traded in a certain candles, and that's what you should value about that, because it will be not you will be see the voids, and that's the important thing. In the algorithmic, let me speak a little bit about what is systematic trading, what is algorithmic trading, and what is quantitative trading. In the market making, you will have something voids of in the liquidity, and it's very good if you're available to interpret and to understand them, because those voids don't last too much. They got filled real quick. And I'm speaking in different kind of words. I mean, I'm speaking voids in the liquidity, but the liquidity could be shown in your thumb, which is fairly more hard to with your eye understand that, probably using certain algorithms with advanced indicators could do the work. But there is the footprint, because that is, I don't find any better name than a footprint. Okay, people are start to positioning 15 minutes into the session. Like I said, let's recap. I said we have certain kind of participants that if they're willing to engage with me, they're willing to give up a little bit of their edge. If they're doing that, they must behave in a certain way, and you're starting to look in it right now in the book. When somebody's transaction, they want to move a lot of size in a short period of time. I don't go into the reasons. I don't care if it's somebody getting liquidated. I don't care if it's hedge funds or if Michael Saylor with their TWAPs. To me, it's very irrelevant why somebody is engaging with the books. All that I care is that somebody is engaging in the books. When somebody engages the books with size, that leaves a footprint. It's one way this thing is called a footprint. So when buyer want when informed buyer want to engage into the books, he's willing to spend a premium in order to engage with it, because he already compute it price. He probably thought that this price is X% far from what it should be. So that gives you an alpha, which is that difference from the price that your model are computing the theoretical price and the actual price, right? So that gives you an edge. And some of them, when they found that inefficiency, they tried to trade it to arbit, or simply from whatever other reason, if they just making along, they have a lot of money, they have just a few ways to do it. And I want to just, oh yes, this is the other thing. If somebody want to engage with the books, they must do it in lower size, super super small size, in order that they don't get noticed. Thing is, if they do that way, they need time in order to get filled. So there's a crazy play that the quantitative algorithms play in that in this field, right? Which is probably very hard size and sometimes with very sophisticated executions. This is called quantitative trading. The quantitative trading involves making hard decisions or crucial decisions in trading with basically math. And that's why options theory it's very handy in that sense. Then you have systematic trading, which in the systematic trading is very similar of what we're using right now. For example, um, I'm actually thinking on launching this. Well, I'm not thinking. This is already a reality. This will happen. I just need a little bit more time to set up the servers, because I will put you this kind of signals in a channel. So, I mean, I don't care. Let's try what's best for all of us. No, at the beginning, these signals will be completely free. If you want to understand how the open range is start to work, it's probably like the order is to steep your learning curve, right? To make it more easier. So a lot of these signals, I don't took it like, I mean, if I see a long, I'm very stiff and I want to take a long. But I am aware that there is a concept that probably people that have not get to all these like options on all this stuff, they're not used to fight for price. And this is something um, that we were having a talk about this in Twitter. Fighting for a price, it was very common back in the day in the pits, for many other reasons that I cannot number right now because there are too many. But I know that if I get a signal, I could probably get a better prices, and then I like to fight for my price. So there is when adding into your position gets very important to have a context and understand it, the context that your DOM will give you, right? So let's say something. For example, right now we're trading the lows on the almost a psychological level just by looking the line. I know I haven't even known the number, but I know that we are trading the footers. Probably people are gonna front run it. Oh my god, they just somebody's looking to this stream probably, and so if somebody want to hide their position, they will do it this way. They will rush to try to buy all the offer that is available, and they repeat this because as you can see, there is nobody offering right now. So that make it very cheap to them to move the price. So as you can see right now, somebody's transacting to it's called two-way trade, and it's interesting to look in because with your footprint you can see where actually is the most volume traded, and I can see the 250s and 220s are the most volume traded. So all of these prices will be about, so I will not bidding anything already. Oh, okay. So the 20s got a little bit for front run. Somebody's stepping their positions. I'm speaking. You guys, I'm seeing this in live. I'm not faking this. I'm speaking, and things are happening because I'm reading this shit, right? I'm not speculating on this. This is like it's something speaking to you, right? So you can see somebody's transacting to two-way trade. Very impressive right now. Probably somebody found what is called a fair value. Two counterparties have found fair value and they're transacting, right? So what's going to happen after this is not matter of speculation, but who can react faster. And that's why open ranges will always give you the right sense of the trade, because if you're already looking that somebody's probably building a position here, you have your open range is calling that you should long, and then there is one only last thing you need: speed. If these start to get pouring with speed, probably you want to buy any dip or to use stop orders depending on how you enter into the market, because I don't remember. No, I don't have put in my hotkey right now. But okay, we're above the 7250s. Somebody's selling the 76, 7080s, but the volume is clear, right? They are layered 60s, probably every 10s, probably 80s, 50s, something in the 40s, but it goes all the way down to the 20s. So you can see definitely somebody's making business, and if there's a couple of things that you want to understand out of this. In order to somebody to sell, they need a buy, right? So as far as been happening, oh no, this is volume, right? So we're just looking for volume, which is totally perfect. Okay, I thought that we were looking to deltas, but that was like there you can speculate somebody's opening closing position, but that's a different talk. So I want to keep it simple so you get a sense of what actually is the footprint. So yes, I was speaking about systematic trading, and it is mostly what we are doing right now, with mixing a little bit of what is um, discretionary trading. And I want to make a little pause here, because if you're watching with me, you are seeing that there is somebody engaging the books and walking price. It's when a very big order tried to spam the book. You see, in order to, but it's making that counterpart uh, when he see those prices, it's attractive to him to, so he tried to sell those back. Somebody took 1 million. Okay, that's an important. Okay, that's an important, because that could be something. Okay, it sold all the way back to the 40s, and okay, we found fair value again. I could say that right now the 40 to range to 20s, 80 to 20s to 40s are playing a very important role right now. I want to mark those levels of the books. 40s, I will pay 20s. So, well, this open range We'll need to check this with your time zones. But this is UTC last 7 at the 3 a.m., 3:30 to 5 a.m. That's my open range. Right, that's my open range. I know that I know this is not after hours. This is a little bit different of how the actual theory of open range goes, because in the open range theory, I remember, if I can recall, you should see the opening market, which here is at 3 p.m., and then the 30 seconds of the opening is your open range. So you can see, or you can imagine, this is something like this. Imagine that this is the opening range. You will be something like this. Alright, it will be something like this. You will be get long at this, probably get break even, and then you will go short all of this, and probably again get break even, and then you have a long again, and you bang. So this open range is not made like that. I must say that it works with 2 hours and a half mostly, and I'm using that as my open range because I'm not using this to trade algorithmically or I mean using this to pass this to an algo. I'm just using this as a signal, right? So I know that if this, for example, opens at here, because this is a 5 a.m., which in my time zone when the is where the New York opening. Well, it's like 6 a.m. the actual New York opening, but I want to start from the 5 a.m. So then on there, I'm on business, right? Because I'm trading the New York session. This is like 5 a.m. for me, 6 a.m. I'll trying to scalp something, right? So market were a little bit late actually, and this one is the Tokyo session, which is for me 3 p.m., which is actually the opening from the market. So yeah, you could say that actually there's an open range. Now imagine that you just opened your market right now and there's your open range. You should long anything, or should be want to be long anything above that, and short anything below that. So let's look again a little bit in the books. There is something that is called ice orders, and I don't know if I already mentioned because okay, I just an hour. Okay, perfect. Okay, let's see this. We're close a little bit above. Okay, round number. Okay, okay, this is interesting because I want you to notice this. How is this? I want to explain you. When I read the docs about this scalp, they say this. If I don't remember, depending, for example, on the side of this blue line will appear, will mean an ask or a bid. If it's above, it's an ask. And the thing is, when a limit refresh and updates with a specific amount and a multiple, my multiple is from 3, it will mark you, and because it records, so it's recording if that's happening, and it makes a lot of sense to me that it's somebody's put in an iceberg, price is trying to walk down because I say somebody's. And yeah, okay, they find in the 40s because of course they're feeling these boys, but again somebody's stepping in very aggressive in that range, and they're trying to pull price back right now. Okay, some density start to appear, that level that was impressive at the Dutch, right? So okay, somebody's giving up their edge, they want to engage with this market probably. Sometimes there's mechanical strategies that if they're above certain levels, they just trigger their levels. Sometimes it could be something like this because they want to be in the market, right? They fight for price, man. They don't just put in a position that they say I'm all in. No, they mostly try to average down and fight for the price until it go into its favor into a certain level of risk, right? I didn't watch it, but as far as I look, it was some bias. So it makes sense somebody is buying at the top because you want to see who is the last buyer bought and who is the last seller sold, right? And it's honestly it's not a easy skill to detect when the liquidity is real because many times you will get fade like this. In this case, I mean it's a super small time frame. We should be looking. I mean, Nasdaq and BTC, like I said, are very very correlated. So probably they will be moving some similar, right? And this is mostly your job now. You start looking at the boys. Probably you start to mark your range now, right? So you want to look, and this is the way. This footprint is just boom, and it's one of the easiest way. One of the market delta going to show you is this one, and it's not that I don't like it. It's very good. You guys should also understand it, but it's just for me a lot of numbers because these ones it reads in diagonally, uh yeah. So you want to measure from this 5K to this one, how much is the imbalance for example in this here, here to here, here to here, and here to here. Definitely somebody engage and leave some voids because again his speed, he's willing to pay some slippage, release on edge, or whatever word you want to say in order to get fill, right? And we're very above of the 40s actually. Let me see what happened at the 40s. What the heck? Yeah, of course they also engage here, and well, fairly these numbers will give you more insight because you can see the poor lords, which is the zeros. For example, here it's called unfinished business, and it's probably that the price is going to get revisited. And something similar is called here, which is poor low, poor low when the footprint leaves this kind of values. If you see you have 64K, probably that could be unfinished business, and the zero is definitely unfinished business. um, well, here you cannot see that. Here definitely you cannot see that, but you can see balloon, and it's a start. Okay, it's a start. Then you can understand some stuff. These days I don't want to pour so much information into my brain because I thought that I don't work that way, right? I have to accept myself. Okay, somebody's trying to buy this breakout. Let's see. if this is real, let's see if these prices can hold. He gave up their edge at where I see that. Oh, I'm sorry, what the heck is this? Used to live. Okay, I see that he good volume at the 220 210s, and we're trading above very good actually. I will put the level below this 260s. The 60s they also uh, probably gave up so much. And we're gonna double this because I like how the profile is looking at. 2, 3. Okay. Yeah, because now it makes more sense, right? Somebody's updating their bits really fast. So, well, London session in like 10 minutes. Okay, let me check this, guys. Okay, this probably should give me some buying power. Still. Order notional must be no less of 100. That's not true. I don't know, man. Okay, well. So, okay, those levels played very good. Okay, they're barely moving, so okay. Just this is for education, right? Actually, right now we haven't witnessed any. Okay, somebody's transacting their file content party. On the breakout, it could be something, but sometimes people walk the price up just to sell it, right? FTX. Nope. No. how the price is behaving. Oh, they definitely walked the price up. That footprint, it was a lot. Did the break it happen? It just was minimum, man. It just looked like this because it's a very lower time frame. Let's make this more 70 so I don't get fooled, right? If somebody's just playing with noise or actually lifting liquidity there. Okay, just trying to make this work, guys. Sorry. Okay, now I will have to update this, but I have to do that another day. Okay. We'll mark again those levels. Those levels were marked just a little by the footprint and the lower levels. Let's see if those get filled. Somebody, yeah, somebody good. Somebody got engaged there. Let's see if they got filled. They still trying to engage those levels, which is the 200 psychological level. People get tired, bros. So right now, okay, there's exchange at very good levels. So well, I think the probably the idea is get it right. You want to focus on the voids. Why the voids? Because those places. I mean, I don't want to get stupid here, man. I don't want to sound smart. It's just there's very complex forces on the market. I mean, it's not that easy, even as I thought. So with those places force, they must behave in a certain way. When they must behave in a certain way, certain things tends to happen. Those things are the voids. You know, those voids could tell you some ways that how the market could behave, where the market could bounce, where is the point of interest, how people call it these days, poise, right? Sorry, it's funny to me that word, but that's the way they call it. So they're testing the lows a lot, so that make me thought exactly that they should break it because the more tests something has in certain level, the weaker it gets, right? So okay, I don't want to speculate on that. Let's see that range, how it range. So sorry, how did it break that range? Okay, yeah, definitely got sold. I get that. Last part parked at the at the 30 hundreds. Okay, we're 100. Yeah, it's not too much. We can go back even to the pre market levels. Well, no, that was probably pre market, but it was the opening. Let's say the opening market. How's it going? It's still transacting there, okay. So, going deeper, a little bit more about what you could be interested of doing with us. The first thing is, if you have a track record, you can send it to me right away, and I will look it, and I can back you up with some money. We could be started from count of $500 that you could leverage starting from 10x, and that going up uh, with the performance, or you can trade your own money in our accounts, and I will provide you with algorithmic execution of this strategy. I will connect to you. Um, and I'm even thinking, because probably I will open source some of those strategy for you guys, which are basically um, the first guys that have been there. So I would like to give you that. But the good thing is that was has um, it's producing more stuff with time, right? So I will produce more stuff that could be benefit a lot of trade, like a scanner is something that I'm having into my notes to build. And for those who trade prop firms, uh, this is strategy I very encourage you to test it on there, because it will help you to be in the right side of the market, like almost always, yes. So I will leave for the second day. We have an hour already, guys. So I will leave this for the next day, which is thumb uses and mid frequency scalping settings. We can go for mid frequency scalping settings. I think I write it wrong, but I mean some kind of the setups which already have the discussed, and probably tomorrow we'll explain how to actually use the DOM. I mean, in the sense to, again, for those news that haven't see how you need to configure this. You need to configure all this and your icebergs and everything, and I will explain tomorrow. Okay. Okay. Those levels are broke, the 200s, and let's say if this range, oh, it's a very slow market, of course. But well, this will be very interesting to analyze tomorrow, because tomorrow we're going to part from here, which is, I like to always leave like a vertical line from what I actually, what was the price when I was looking at, right? It's something a very common practice I have, just for reference, where it was, what it was looking, right? So you know then that you were looking this, right? This is bond market. The ultra bond. And you get forex also. This is Mexican peso, my coin. This is British pound future. So this is on my watch list, right? This is everything I'm looking at the same time. Mostly this is the stuff I look up, but this contract is the wrong one. This one is the correct one. Yep. So I know where I was trading, right? Because you can trade here your open ranges, man. Definitely. Oh, there is just one indicator I haven't give you guys. It's called Trading Riot. It's from Volume. The blue lines could call about mean reversion. Red lines could call expansion because it's very strong volume with no price move, and the yellow ones means suppression of volatility. No moving at all. So which call that move can happen very soon. Yeah, this is very tough ranges. I mean, for the day trade, but there are definitely some of them that could play out. Yeah. Okay. Thank you guys. If you guys reached like here, let me just introduce myself one last time. What is this? What's happening? Oh, yes. Okay. Thank you guys a lot for getting here. Tomorrow we're going to explore more about footprint, the DOM, how to modify that. Keep talking about this. Let's check the markets when I leave. Let's see this one. I did mark all the coins. Yeah. And I think that would be it. I will not be trading like all of them at the same time anyways, just to look for the good setups. There's just one contract that I'm missing here. Yes, but that probably is because it's not from comics. It's probably going to be delayed. The gold. Yeah. Gold contract. Oh no. Good. Very good. This is the gold contract. But for some reason there's no signals of trading. Well, okay. Thank you guys. Thank you for watching and see you then. Bye.